sort of give us a little telegraph where you see things on the next kind of stage, and following that, we'll open up for some questions. Or what's your kind of view of what to expect going forward?
I'll leave on that and maybe follow up even on what Dan just talked about. I mean, I think we've spent some time discussing now the whole issue of technology risk, and that people are not willing to take that. Most investors are not willing to take that today. That shouldn't be confused, however, with unique and innovative ways of using existing technology. And I think Dan highlighted a great example of that, talking about this carbon fiber composite now being used in cars that was developed completely for something else. And certainly in our Prometheus experience, we did that, creating unique value chains, but not using any new technology to do that, using existing technology, existing assets to do things in a unique or innovative way. And I think you're going to see a lot of companies who figure out how to use what's already been developed, already been proven, no technology risk, in unique and innovative ways to create real value over time and investment opportunities.
To that end, what we're seeing in some of the early stage markets, I think this is correct, smart entrepreneurs going to a Fortune 500 company, looking through their technology or science portfolio, saying, I think I can take that technology or science and turn it into a product, and they create a company, they spin it out. Fortune 500 company owns 50%, the entrepreneurs own 50%, and they use that as a basis for building a business. It's kind of analogous to spinning technology out of a university. We're seeing it spun out of Fortune 500 companies. And the energy companies, the oil companies have these broad technology portfolios. There's so much stuff just sitting on the shelf. You get a lot of entrepreneurs now that are going and looking at technology and spinning it out. It's a win-win. Win-win for the energy company as well as the entrepreneur. Because this technology is just orphaned, totally orphaned.
There's an interesting example of what Kirt was talking about on taking existing technologies. There's a Cleantech Open regional winner for this year, which took 2011, was Indo Windows in Portland, and they do snap-in windows on the interior, so you get the benefits of double pane, about half the cost. So, and they'll come in and measure your windows. They have a really interesting, their innovation is really their business model. Kind of like Dell innovated how computers were sold and made to orders and sales. They're sort of doing a similar thing to energy window retrofits. But the plastic they buy from third parties. They have some innovation around the seal and the bead, but the real innovation is their business model and how they rapidly produce it. So there's really not technology risk. It's all about how do I efficiently get to the customer and produce this in a way that's cost efficient. So we see things like that. A very strong interest at the early stage for that lot of technology risk.
Well, prediction is difficult, especially about the future. That's what Niels Bohr said. So, but one thing that I think is interesting when you sort of look about where, how markets look at the future and price risk, right? So, the risks, which I commend to all of you as an interesting source of kind of coverage on the environment and the economy. Had a good post about, when you look at the market cap of fossil fuel-based companies, oil companies, coal companies, natural gas companies, their market cap assumes that they are going, to burn their proven reserves. That's how they're priced. Well, those proven reserves are about twice the global carbon budget if we're not going to blow through, a 4-degree increase in 4-degree Fahrenheit increase in global climate temperatures. So you go, okay, well, so the science is getting pretty. There's still some, science risk there, but if that's going to, if that's the trajectory we're on, then there are probably some other assets in the market that are mispriced because they're not accounting yet for the sea level rise, and so I think that's, at some point that there's some, we've had this experience recently, right, where you see this can't go on, sometime the market's going to adjust, right? So right now we're on a trajectory where we're going to burn all that carbon, and then that's going to have consequences for the planet. So, I think, as investors, thinking about adaptation and how that's all going to play out here over the next, 20 years is going to be interesting.
Yeah, on Kirt and Michael, on the gas, on the natural gas program, if it's sort of pseudo-political question, but if you took out the part the environmentalists are challenging on that, earthquakes in Oklahoma and groundwater, and how do you mitigate that, and how if you mitigate that, then what's the price? What % of the newfound ways to get it at less cost, what's left after you take what's going to be challenged off the table of the gold rush?
Well, I'll speak to that. I mean, I don't know the precise percentage, David, but it's not insignificant. I mean, there's a number of graphs that show that, and I would guess you're looking at maybe 15–20%. What's really led to the abundance of natural gas, and David's alluding to that here, are two new technologies, two new ways of doing things. One is fracking, and one is horizontal drilling, and certainly the fracking has become very controversial. Some countries, France, won't allow that. Poland, where we did some businesses, is taking it very slowly, and we're seeing the U.S., even certain states, taking quite a stand against that. So you can pull that out, and it's going to have an impact. There's no question about that. If you look at 2005, I think it was 2005 or 6, I think 05, the CEO of Exxon said that we've reached peak production for natural gas. We'll never be able to produce more than this. We've found everything we're going to be able to get to, and so you'll never increase that. We're about 15% over that now. So if that gives you some idea, and a good portion of that comes from these non-conventional sources that we get through fracking and horizontal drilling.
I will say one thing about the new technologies. They create tertiary opportunities. I think the best opportunity around natural gas, in addition to the infrastructure, is water. Right? You force water down, it becomes tainted. The ability to clean up that water is very, very valuable. You're going to see some massive water companies created because of that opportunity. I think there's one here locally in town that's going to benefit.
The Israelis are doing.
Pardon?
The Israelis are doing that from their desalinization technology. They're moving some of their technology.
Huge, massive opportunity.
I would say from a policy and energy independence and environmental preservation perspective, we have a big incentive as a country to figure that out,
Yeah,
right? And so I think even some of the natural gas companies are starting to come around to, like, let's find a regulatory regime here that makes sense. And so, they're agreeing to disclosure on what's in the fracking fluids. And I think, my hope is that we can figure out how to do it in a way that's going to be environmentally sustainable, because it is a huge, it's really meaningful. You can sustain $3 natural gas for, several decades. That does allow us to transition out of coal-fired, and then you got to keep pushing these other technologies. But if we can't, figure that one out, then kind of where do you go if you really are trying to get on some trajectory to reduce our carbon emissions? I mean, I get, reasonable people can disagree about how you're going to get there, but to my mind, either you're going to go big on nukes and you're going to electrify everything, or you're going to try to, do. I think you have to pivot in some direction to some technology, and I think maybe it's not just one thing, but that generally there are the wedges, right? You're going to do several things, but the things that are economic right now that help you get to those reduced emissions, natural gas has got to be a big part.
In all of your discussions about trends, I guess, in investment, you refer to these big funds becoming more risk averse, and the reluctance, I guess, of early stage investors to invest in anything that's capital intensive or unproven, i.e. cash flow proven technology. My concern, and that's appropriate, it's totally appropriate, I guess. My concern is that we're losing the innovation battle here. The tech transfer models to universities and so forth just don't work. What Byron, I think what you said was that these new innovators are turning to foreign countries to get their capital. What happens to this country as a source of innovation, and are we going to become